Hello everybody, welcome to this webinar brought to you by OctaFX. OctaFX, an award-winning broker that has one of the lowest spreads in the industry. Today we're talking about pound dollar. It's an educational webinar and sometimes called the devil's currency pair. Before we begin, just a bit of housekeeping, some disclaimers. A risk disclaimer, trading foreign exchange and margin carries a high level of risk and may not be suitable for all investors. You should not invest money that you cannot afford to lose. And about this webinar, hypothetical trading disclaimer, the information in this webinar is provided as general market commentary and does not constitute investment advice. And a few quick words about myself. My name is Yohay Elam. I'm a Forex analyst. I used to be a retail trader and a computer programmer. I founded Forex Crunch back in 2008, and the focus is on fundamental analysis. All right, let's jump in. Let's begin. So today we'll talk about what makes pound dollar cable special. Okay, we'll discuss its technical curiosities. I know a lot of you are technical traders. We'll talk about the reaction to news releases, which is also very special when we're talking about the British pound. And we'll also discuss the current extraordinary situation in the pound, of course related to Brexit, which is due to last for quite a few years. Okay, so what makes pound dollar a special currency pair? First of all, it's one of the oldest currency pairs, perhaps the oldest one. It's called cable. It has this nickname because the prices were transmitted over the old telegraph lines, over cables, back in, well, many years ago. The pair is far from being an old and traditional and conservative pair. Okay, it sometimes can go wild. What else makes it special? Well, London is the capital of Forex. So the biggest financial centers in the world are New York and London, and maybe when we're talking about stocks, it's more New York. But when we're talking about currency swaps, we're talking about London. Even the clearing of euros, and the UK does not, of course, participate in the Eurozone, it's made in London. It might move, of course, to the continent after Brexit, but for many years it's in London. So London is special. In general, in comparison to the size of the economy, there's an outsized focus on the pound, so that also makes it more special. A few big events. George Soros broke the Bank of England back in 1992 by forcing the UK to leave the peg, the ERM at the time, and of course Brexit. Okay, some technical curiosities about pound dollar. So in general, we're talking about euro dollar, the world's most popular currency pair. It's relatively slow in comparison to pound dollar. Pound dollar moves in a much more quicker manner. It can be at times quite choppy. Okay, movements that go up and down in a relatively fast manner. I would say wider stop loss points are needed. Sometimes the pair can break out of range and not really make the real break, so wider stop loss points are needed. And if you want somewhat better technical behavior, go for perhaps check out pound yen. Lots more pips there. Also there we have risks, but and caution is needed over there, but in general it's more a bit more predictable, a bit less choppy. Okay, further technical curiosities. We had some wild, crazy moves, and it's not only around Brexit. Okay, in many cases we had these fat fingers. When we're talking about fat fingers, talking about one trader perhaps typing in an order which is outsized, which is quite big, and then we have sudden shocks. It just happened too many times. These kind of flash crashes that you see, pound dollar trading in range, even if this range is not very narrow, even if it's quite significant, quite robust, and then you see this big crash to the downside that lasts only a few seconds, and then things recover. So it's not exactly what you expect from a currency pair that is very heavily traded and gets the attention of so many market participants. Okay, so again, trade with care, use a stop loss, and keep them a bit wider than you would do in euro dollar or dollar yen. Okay, reaction to indicators, our third topic for today when we're talking about pound dollar. This is special. The movements begin 20-30 minutes in advance. When I'm talking about UK indicators, these are usually released at 9:30 UK time or 8:30 GMT now in the summer. And the movement begins 20 or 30 minutes in advance. We already see something going on. Okay? It happens more than any other currency pair. So when we have a big release in the United States, usually there is tension in the market and everything explodes. Trading moves much more once the indicator is released. In some cases, we do have a bit of tension and nerves released, and you can see some movements a few minutes before the event. In pound dollar, it's much more evident, it's much stronger, it begins 20-30 minutes in advance. Leaks of indicators are not uncommon. I don't have any specific proof, but there was a commission in the UK which investigated it and then found that, well, in some cases there are leaks, okay, and you can also see it on the charts. Somebody knows something. But sometimes these aren't leaks, these are rumors. So these rumors are also plenty, and one trader chats to another one, the big boys, and a movement begins in the chart. There's a whisper that the number will come out better than expected, worse than expected, and you already see some kind of movement. We're talking about indicators like the jobs report, inflation, purchasing managers indices, retail sales, trade balance, basically everything. Almost all the moves, all the indicators are released at this time at 9:30 UK time, 8:30 GMT, and that triggers, and you see the action coming beforehand. Regarding these rumors, of course, they're not all, and leaks. They're not always true. They can be misinformation. Somebody trying to sell another trader pound in a high price, or the other way around. So lots of misinformation, lots of rumors that, well, are unbased. We know that many rumors are just not true. And then we have, in case the rumors are wrong, we have a sharper counter reaction. So you can have pound dollar rising in anticipation because of a leak, because of a rumor, to higher ground. We'll have a better, let's say, better earnings report, better retail sales, and then when the data comes out and it's just as expected, or just or even worse than expected, we see a sharp counter reaction. In case they are correct, you can also see that. So if, for example, you expect a retail sales rise of about 1%, and the actual figure, and the rumors are of a rise of, let's say, 1.5%, and it comes out at 1.5%, then you can see a buy the rumor, sell the fact. We talked about that more in detail in the general webinar about trading the news. So also this kind of thing happens. It's very, very common, perhaps most common in trading the pound. Okay, but there is also the case of an extension, that you have retail sales are expected to come out at 1%. It comes out, rumors talk about 1.5%, and the actual figure is 2%. Okay, even better than the rumors. So in this case, you can see an extension. So everything is really possible with pound dollar. Again, relatively messy currency pair to trade. Okay, and now let's talk about, we already talked about why it's sometimes complicated with technical stuff, with choppy moves. Let's talk about what happened, well, in the past year and what we can expect further on because of Brexit. So when we're talking about a complicated pair, it's not only about indicators that we talked about just now. Brexit is complicated. So many, the UK economy is entangled in the European economy, and to untangle it will take quite a lot of time and lots of uncertainty. So initially after Brexit, we had a messy period because experts were warning about a deterioration in the situation. The Bank of England reacted quite quickly by cutting interest rates and adding more QE. But initially, the economy was looking really great in 2016. So everything looked rosy. The supporters of Brexit said, look, we don't need the Eurozone. Things changed in 2017. There was a weak first quarter. The second quarter doesn't look good as well, so it's a belated deterioration. The problem is, after the recent elections back in June, is that the government doesn't really know what it wants, what it's going to do. Just today, but this is an example, we heard that the British government wants to consult the opposition, the Labour Party, to talk about Brexit. But this is just part of a general theme of high uncertainty. And it's going to last at least until 2019, but perhaps well beyond if there is a transitional deal. In general, markets hate uncertainty. Uncertainty means more volatility. Markets want more trade, participation in the customs union, single market. They don't want to see the UK thrown out. I mean, it would be better for the pound, the reactions we've seen so far, if we have a closer deal with more trade. It'll be worse for the pound if we have if the UK is more in isolation. Uncertainty, as I mentioned several times, can last for a very, very long time. And markets don't wait for something certain for an official announcement or for some kind of other kind of certainty. Markets move on every kind of speculation. That's why it's becoming complicated. And in many cases, well, central banks move markets more than government. So it's not only, of course, about Brexit. Also in the UK, it's about what the Bank of England does, and it seems very, very confused. Members in the Monetary Policy Committee, they're independent, and each one has his own opinion, her own opinion. And to top it off, the governor of the Bank of England, Mark Carney, he has changed his mind several times, not only around Brexit, but in general. And he continues in his position until 2019, or even it might be extended even further. So at the moment, the confusion of the central bank makes things even more complicated. And contrary to other developed economies, inflation is real and a real problem. So we're talking about the Eurozone, Japan, the United States, other places. They're trying to lift inflation. There was in Japan still a danger of deflation. So in the UK it's different. Inflation is too high, above the target. Also because of Brexit, it's not something new. It's something that happened also after the crisis. And so the reaction function of the central bank is different. In many cases, you can see the Bank of Japan intervening to weaken the yen, the ECB talking when the euro is too strong. They're trying to push it lower. Even federal in the United States officials talked about the dollar being a problem, pushing inflation down. In the UK, it's exactly the opposite. The UK really stands out. The central bank is cheering for the currency. They want a stronger currency. And we've seen that in recent months, and I believe we'll see that for a few more years. Okay, so let's do a conclusion of this special webinar about pound dollar. Pound dollar is special. There's an outside interest in trading. This outsized interest doesn't mean that trading is easy. While volume, liquidity, they're very high, we can sometimes see these flash crashes, choppy moves, and higher stop losses are needed. Okay, technically it's a bit wild. Again, stop losses are needed. Well, in general, stop losses are important. Consider pound yen. Another feature with the pound is that it preempts economic indicators like no other currency. So you can see the movements beginning 20-30 minutes in advance, rumors, leaks, speculation, you name it, and then you have different reaction. Also, we see this in other currencies, but it really stands out in the pound. And the current situation is very messy because of Brexit. Even when we're talking about general characteristics of pound dollar, Brexit is such a big event and will last for so long that it has an impact on the technical behavior of the pound and everything. So that's it. Thank you very much for watching, listening. We'll have shortly another webinar about dollar CAD, and you're welcome also to join the regular fundamental analysis, and comments and feedback are always welcome. So that's it for now. Safe trading, everybody, and see you soon. Thank you, and bye-bye.